What's going on, guys? Good evening. How you guys doing tonight? Doing pretty well. I'm trying out some different start times for the class. I honestly didn't realize that the market was going to be closed today, so that probably doesn't help. But if it's just us couple guys, then it might be a fun one. Um, but yeah, doing well. I think next week I was going to try a lecture during market hours, like I don't know, like a 10, like a 1 or 2 Eastern lecture, and see how that goes. Kind of sounds fun. What's up, River? Is that really you?
No.
Well, good to see you. We got quite the crowd in here tonight.
Big one, dude. Love it.
Well, maybe you and I can just hang out and we'll it'll be like a 2-on-2. We'll do like it's almost like a little mentorship.
I like that, dude.
Why the hell not? I was telling these guys, River, I think it'd be fun to try a midday lecture. I've been just trying to experiment with times because I feel like we really haven't changed the time up too much recently. And I think this is why we don't do Fridays at 4.
Well, yeah, and no market and 3-day weekend. Yeah, it's a tough one.
Yeah,
Even my
yeah.
mastermind class last night, I think we had 12 people
Oh wow.
down from our 80 the previous
Yeah,
class.
that's wild.
And so I was like, we're just gonna bump this to next week. Let's have a Q&A.
Cool. That works. All right. Well, I don't think there's any point in us waiting any longer. I'm going to send out one more message letting everybody know we're getting started. And if nobody else joins, and that's great. And it's just going to be a couple of us, and you guys can literally get your personal mentorship, I guess, included in your membership today. Because why the hell not? Cool. All right, everybody. Well, yeah, we'll wait for other people as they trickle in. It looks like Rivers in here tonight. We'll see if he sticks around the whole time or not. But yeah, big idea for tonight is really just a simple Q&A. And then I was going to just talk about some charts as well, and maybe I'll let you guys start with some questions, and those will probably guide me to start looking at the charts. And we could even start with a quick recap too, just while everybody's here, and maybe that'll prompt you guys to start thinking of some questions. But yeah, that's the premise of the lecture tonight. So as you guys have any questions, like literally anything, go ahead and put them in the chat. You guys are also free to unmute your mics as well. Yeah, so if you want to just unmute, start talking over me or interrupt me, please go ahead and do that. No worries at all. And yeah, we can just have a conversation. There's only 6 of us total in here, and 2 of them are me and River. So can definitely have a really personalized session for you guys tonight if that's what you're looking for. So yeah, with that, any questions or comments to get us started? If not, we'll just start by kind of reviewing where the market's at. Cool. All right. Well, in that case, we'll just get right into it. So you guys can see I have the chart of the S&P up right now, SPY, and I've been taking these notes on the chart since Trump was elected because I just had a feeling it was going to be relevant. I just didn't know why yet. And you can kind of see how they've been working out for us. So over kind of the Trump presidency right now. We started around 5,800 or 585-ish on the SPY. Now we're down, let's see, about 10-ish% almost since Trump was first elected. A lot of volatility since that time. In terms of the past really 6 months I guess, first 4 months of his presidency and past 6 months since he was elected, we've had a couple kind of real pivotal points in the market. The first was this first cut out of the Fed. Well, not first, but a significant cut out of the Fed. That was a little bit more of a, I think, hawkish cut, or not exactly what the market was looking for out of that. The meeting minutes that the Federal Reserve delivered during that period. So that was that first significant pullback out of this presidency. And then obviously the hot topic as of late has been tariffs. And this has been going on since really the end of February. So I know a lot of us maybe really started to get concerned about the whole tariff thing maybe in mid-March, but really this has been kind of a known 100% certain thing that's been happening since mid-February. And this event in specific, I think, makes it really incredibly clear how important it can be to pay attention to what's going on with a new president and the overall economy, because it doesn't matter how many bull flags or how many uptrends are in the market. One headline can absolutely change the entire course of how the market is trading. And that was exactly this headline that we got back really at the end of February, where Trump first announced, I believe, those 10% tariffs on Mexico, Canada, or maybe it was a 20%, I don't even remember anymore, on Mexico, Canada, and China. And that was supposed to be for fentanyl. And then on the 3rd of April was where Trump announced, I think it was the reciprocal tariffs on, I denoted it as the world, where there's tariffs on basically every trading partner of the United States. And I think some countries that we don't even really trade with all were announced on this day. And then a few days later is when those tariffs were put on pause. I guess I should change this note here from canceled to paused for 90 days, which was the result, or which caused this big rally, kind of single day, I think 10 to 12% move in one day. I know for the Qs, it was a 12% single day move higher. And that was the second biggest green day in the entire market. Well, not in the entire market, but in the history of the NASDAQ trading. And I think the only other bigger green day, just to look back at some history real quick, was during the 2008 bubble. And when that was kind of, I'll say, bursting. And I can't remember exactly where that was. Let's see. It might be here. Let's check this out. Yeah, so this is going to be the actual biggest day ever for the Qs. And you can see this was basically a 12% single day gain. And just notice how, yeah, there was a massive 12% single day gain right off the 200-day moving average. But look how things continued after that, right? That was that single day gain. And the market from that day continued another 80% lower. Now, this is not me saying that the market's going to continue to move 80% lower, but we've talked about this in the last few lectures, especially in our last lecture on bear markets. The biggest rallies always happen in bear markets. So fundamentally, the market is still maybe not in a bear because we never really closed, well, at least on the SPY, never closed below that 20% threshold. But by all means, the Qs are definitely in a bear market, and the biggest rallies always happen during that bear market period. So in my opinion, at least for the NASDAQ and the SPY really, there's no real kind of high quality trend until we break above this bar. So it would really be a 470 break is when you could maybe start to add a little bit more size to the upside. But as long as we sit within this range, the trend is still down, right? I mean, just taking a look at the longer term moving averages, the yellow moving average represents the 20, orange represents the 50, and the red represents the 200. They're in a full downtrend at this point, right? With the 20 below the 50, below the 200. And I've showed you guys back tests before in these lectures, and this is not an environment really when you want to be buying. Well, I guess that was a weekly moving average study. So from a weekly perspective, we're still doing all right. It'll really start to get ugly once we start to see these moving averages cross the downside. But in general, it's never fun when the market's below the 200-day. Really nothing good happens below this 200-day moving average. And you can see over the past really 2 years, the market was supported twice at this spot. And now we're sitting pretty comfortably below it. And it definitely seems like the market is more than comfortable sitting below this level. And the other couple things that I've talked about in the last few lectures, and this was actually something that I learned from River in 2022, is just having these kind of correction and bear market thresholds marked on your chart. They're incredibly important, and all they are is like if you multiply this 540.81 by 90%, you get the level where we're 10% off the highs. If you multiply that by 80%, you get the level where we're 20% off the highs. 10% being the level that represents a technical correction, and 20% being that level that represents a technical bear market. So those are really the most important levels near price, in my opinion. You'll hear a lot of people talking about, maybe the death cross or whatever. I think this is called the death cross. I don't even know. In my opinion, that's not really relevant at all. I think, yeah, there's much more important things to be paying attention to that. But anyway, that's where the market's at. Again, I feel like I've been kind of turning into a broken record here, but like we talked about and like we've studied in past bear markets, the bear market won't end until the fundamental reason why the bear market began is resolved. And we talked about this plenty of times in lecture, and you can see how once there started to be some progress on the fundamental reason the bear market began, which was getting that pause on tariffs, that was when we got some more serious upside momentum. But that was only a pause for 90 days. And also the tariffs on China have been escalated since that day, which is generally still not a positive sign considering China is probably our biggest trading partner, if not top three. So overall, that's where the market's at. Trend is still down. We're still definitely dealing with the headwinds of all the tariff headlines and kind of economic policy that's being developed by the current administration. And that's going to continue to be the case. And you should continue to treat this market as a downtrend, as a bear market, until the situation on tariffs either is completely over or there's more meaningful progress, right? Like we need to see those tariffs on China come down, or that pause for 90 days turn into a permanent kind of cancellation of the new tariffs that were proposed. So that's kind of the 10-minute summary of where the market's at in general. Any comments, questions, things that didn't make sense? I don't want to spend too much time on it because we've talked about it so many times in lecture, but obviously this lecture is all about what you guys want to hear. So if you want to hear more, we can talk about it all day. Questions, comments, things to clarify, anything, guys?
I guess I kind of have a question.
Yeah.
So it's like the tariffs, how do they directly or indirectly affect the market price?
Yeah, that's an excellent question. So I think fundamentally, every news event that's on like a global or policy scale is going to indirectly affect the market because the tariffs aren't directly targeted at Apple, right? It's not like Apple specifically is going to be tariffed. So it's kind of a niche discussion, but since Apple sources so many of their products from China and Taiwan and South Korea and Japan, yeah, it's going to directly affect them. So I guess the workflow of how these tariffs impact the market, just to explain it, because it's not really I'll say, perfectly direct correlation. But let's say for in general, a manufacturer like Apple, right? Apple sources a lot of their iPhones or manufacture them in both India and China. And as tariffs on India and China go up, what that means is as those products are shipped to the United States, the amount that the government charges is going to be astronomical, right? Because those products are being shipped from China. And as a result, Apple is going to need to do one of two things, right? Either Apple keeps the price of iPhones the exact same and they absorb all the costs. So they pay the tariff and the customer doesn't. Or there's some kind of split. Well, I guess there's three options. Or there's some kind of split where Apple pays some of the tariffs, the customer pays some of the tariffs, and the price goes up. Or the price just goes up and the customer pays basically the whole full force of the tariffs. And I think there's been some calculations done for this specific example for Apple and iPhones, where if these full tariffs do go into effect, the cost of an iPhone could go up to somewhere around $2,000 to $3,000. And this is all still kind of hypothetical. But think about what that does, right? So fundamentally, the cost of the iPhone is now double, triple. now you and probably everybody else is going to be less prone to purchasing an iPhone, which means revenues for Apple go down. That's the top line. And also profits are going to go down. That's the bottom line, right? And in general, what market participants are looking for is growing profits or growing revenue or some prospects to grow both of those. And if that's not there, that's why market participants sell, right? Because they're not seeing that same growth that they might from something else. Like, for example, a Costco is maybe a little bit more flexible and maybe able to avoid tariffs in different ways because they're starting to source some of their own brands. They're able to control more of the manufacturing and supply chain locally in the United States, whereas other companies like fundamentally can't, right? Apple, like the whole business model is really based off of that low cost manufacturing in China. So other manufacturing companies or service-based companies or software-based companies, those are going to fare much better than more hardware-based companies. And you see that too in a name like CRWD, still definitely taking a hit, but holding up much better, only, let's see, about 17% off the highs compared to something like an Apple, which is something like 25% off the highs. So again, Crowd is a software company, right? There's no real tariffs specifically that directly impact them. However, again, there's kind of another layer to this argument, which is if the companies that are purchasing this software to secure their systems, like CrowdStrike or Okta, if they're making less money, they're going to cut expenses to keep profit high. So it's this whole like negative feedback loop where the companies that are selling products are going to make less money, so they want to spend less money, and they're going to spend less money on other companies that are selling services and things to them. Anyway, that was a really long-winded answer to your question, but does that make sense?
Yeah.
Cool. Okay. Is there anything that I can clarify? Because I know I kind of maybe simplified things that I shouldn't have. And anything else for you to add, River? If you want, I don't want to make you work if you don't want to. But yeah, anything else to comment?
No, I mean, I really liked everything you said. Just the, and I really like that question too. Does it have a direct effect on the market? And I mean, the most general question is 100% absolutely, because it affects all things financial from, the CEO of said businesses all the way down to the consumers. So when you have like universal negative effect, you absolutely end up with a negative effect on the market. There's really just no way around it. And then even as Tostie said, will some things be immune to this? Yes, theoretically,
Yeah.
But the real issues arise with, nobody especially cares about, many of these tariffs. We don't care about the tariffs on Lesotho or whatever. We care about the tariffs on China because, I'm not saying this is a good or a bad thing, but if you sit and you look around your house right now, every single thing that you own has something from China in it. Says made in America, great. Made in America with Chinese plastic or metals or things like that. So the real issue arises is that this like tariffs penetrate to the core of everything when you do it on our largest trade partners, Canada, Mexico, China. Those are our three largest trade partners. So when those are the people who are facing some very big tariffs on the things that affect the consumer and the spender on these businesses, it's really just going to have a really, really theoretically very negative effect on consumers and businesses and the market and everybody and the world.
River, I realized I haven't even talked to you about this paper, or maybe I did. When I was researching for my last lecture, I found this paper that was developed, this like research paper that was developed, I think right around the time that Trump kind of round one of tariffs were being developed during this.
Yep.
You read this one? Yeah. So
yep.
This paper basically says that tariffs are basically inflationary. They lower GDP. And this was another thing that we didn't talk about earlier, which is inflation has been the number one kind of concern of the Federal Reserve for the last 4 or 5 years. And inflation goes up.
Technically, it's half of the Fed's job, battle inflation, price stability
right.
That's part of the Fed. They supply money and they promote price stability. That's what the Fed does,
Right. And obviously, I mean, they also like to support employment and what's the term they use, like maximum employment or something like that.
They look for max employment and then price stability. That's the true, statement of
That's a two dual mandate or whatever. But anyway,
exactly.
yeah. So this paper is really interesting if you guys wanted to look into this. But basically, it argues, and I wanted to be clear. I don't know if there was some, maybe political motivation to developing this paper. I personally thought it was interesting, but read it with a grain of salt for sure. Um, anyway, this paper basically argues that tariffs are inflationary. They lower GDP, and the lower and middle class basically are the ones that feel the brunt of the effect of tariffs. And I mentioned this in my last lecture. This is not the first time that tariffs have ever happened in the United States. I mean, they've probably happened maybe tens or twenties of times over the 300-year history of the US, even 400-year history of the US. So it's not a new thing. And the market knows what happens when tariffs are enacted. And generally speaking, the economy contracts, people make less money, people spend less money, which none of that's good for these publicly traded companies.
Yeah. And I mean, if you want to look at the some of the worst examples of tariffs, go back and look when we did them in the 20s and look at what it led into, I mean, from the 20s to the 30s was a rough time in America, commonly known as the Great Depression. Tariffs had a very, very big role in that occurring. And so always just,
I didn't know that.
yeah, yeah, they were.
I
I mean,
actually didn't know that. Yeah.
well, and it's
Yeah.
interesting because that was when America, they made a really interesting shift. We were in those days, we started to tariff things. And it was because we were becoming big into manufacturing cars, blah, blah, blah. We
Oh, and
were
that was
really,
before income
yeah.
taxes, right?
Probably there was probably a little income tax then,
Before
but
like
but
significant ones, yeah.
but corporate taxes were massive.
Mm.
There was a time in America where corporate tax was like close to 80%. As no surprise to anybody, it was like the best time in America. But we had the really interesting thing where at that time in America, we were trying to become a manufacturing powerhouse. That's what we wanted to do. So we started tariffing. We wanted to, bring these jobs to America. We wanted to work in America. Obviously, China wasn't manufacturing yet. And
No.
it went so poorly for us that, as the 40s and the 50s came along and, the boomers and all of them, that was when America really made the shift to focus on innovation and education and move away from being a manufacturing powerhouse. Obviously, we still manufacture a lot of stuff here, but we wanted to move away from manufacturing to becoming a very well educated, very innovative country. And so that's what we started to do. Post depression, post manufacturing like explosion in America, we started focusing on education and innovation. And then through the 60s, 70s, 80s, that's when we really started moving things to China, Vietnam, all of those places because we wanted to continue to focus on education more than anything else in America. And not saying it's right or wrong, but let the companies or the countries that pay less for labor, blah, blah, blah. Again, not saying a good thing necessarily, but let those countries that are willing to manufacture for cheaper do it. And that was, well, interesting enough, it was a big push from the Republicans all through the 60s, 70s, 80s into the 90s of keep your hands off trade. Trade is great for America. Look at what it got us. We are the richest, most powerful, theoretically most educated country on the planet. Sometimes I do question that, but if all of if all of these trade decisions, everything that we made landed us right where we are. Not to say that there isn't, we have debt, as most of you guys know, I think the Fed has done a phenomenal job. Fed and Biden, whether you love or hate Biden, doesn't matter. They did really good things for the economy, but debt has been this overlying issue, and so now we do have to deal with the debt. But it's just we're taking a dramatic shift right now in America to start trying to theoretically start trying to focus on American manufacturing by using tariffs. But we're ignoring what history has taught us. When we manufacture in America, and we all know it, if you go buy made in America, it costs you more. Well,
Right.
it will cost us more. So if we start manufacturing in America, we start paying more. So we are paying more, substantially more on our tariffed goods, and then we're paying substantially more on the goods made in America as it is. So no matter how this plays out, we, the consumers, take it on the chin for the big businesses, for everybody, you know? So that's why there's this dramatic pushback from most people right now. Well, a large group of people right now pushing back saying, whoa, you know, you probably shouldn't do this. You know, we even finally have Trump's Treasury Secretary saying, like, these might not be a good idea. And so that's, you know, it's good for us. The big fear right now, obviously, recession. And step one to recession is stagflation. And stagflation is simpler than people make it out to be. GDP going down. We don't know for sure, but the predictions say that we're going to go from about a 2.4% to a minus 2.4% GDP. So an absolutely gigantic swing. So we got GDP going down. Step number two, unemployment up. We're already seeing unemployment tick up. And then obviously demand down because cost of goods are going up. And so we're seeing a reduction in demand, you know, from all of our manufacturing data lately. Just the demand is down and supply is up. So GDP down, unemployment up, demand down. We already have stagflation. Stagflation leads to two things: a massive increase in inflation and a recession. So we're walking a tightrope right now, economically in America, for sure.
Yeah, and I mean, I couldn't have said it better myself, and I think that's a completely different perspective than I'm usually tapped into. As you know, I'm not super tapped into all the specific data points, and never really have been, and probably that's my own fault. But regardless of that, I mean, yeah, fundamentally, that's what the market's trading off of, and I think hopefully what me and River just talked about over the last 20, 30 minutes is that, and there's a question too that somebody says the news overrides your trade plan. 100%. If you are ignoring what's going on in the economy right now, you're wrecked. And so many people that tried to ignore it and tried to blindly buy the dip are wrecked. And so many people that bought the top of that 10% or 12% day higher are wrecked. So trading in a bear market is hard. It's not supposed to be easy, right? That's why they call it a bear market, and that's why they don't happen as frequently, because I don't think anybody really likes them, and they don't come around super often for a reason, right? It takes a lot to make the market give up its upwards momentum. And it's a tough situation that the economy in general is currently in. And a lot of the market doesn't like uncertainty. And that's what we have a lot of right now, is these tariffs are looming. The data is at a point where it's not bad, but it's not good, right? Unemployment already ticked a little bit higher, which caused the Fed to cut rates months and months ago. Even before Trump started, unemployment got up to around 4.1, which was a little bit historically high for them, I believe. So anyway, the economy is in a precarious spot, and the market doesn't like uncertainty. You know, they want it to be clear, and seeing that the economy is strong, the consumer's strong, companies are strong. And when that's not the case, the market doesn't like that.
And that's, you know, that is something that we have really, you know, like, without getting too deep into financials or anything, these next earnings reports are going to be very, very interesting.
right.
We had the banks last week. I won't say they were upbeat, but they were relatively neutral, which that surprised me personally. However, we had another one, American Airlines. I think it was American Airlines.
Or Delta. Might have been Delta.
Where they did two completely different guidances. They said, if America goes into a recession, we do this. If America does not go into a recession, we predict this. The
I don't
last
know.
time that a company did something like that was JP Morgan at the end of 2021. And their stance was, if the Fed starts hiking rates, we have a longer term positive outlook. If the Fed does not start hiking rates, we have a longer term negative outlook. And
Oh, it was United.
yeah, was it United? Okay. And so obviously in 2022, we can even see it, or it was right there on Tostie's chart. We started hiking
That's
rates.
actually wild. I didn't see that.
It's insane, and for companies
Wow.
to be doing that is worrisome. And then for all of us, you know, most of us in here, you know, we trade big tech, we trade SPY, we trade your Apples, Amazons, QQQs, all of those. You know, we trade those. So you might have heard the term CapEx. All it means is capital expenditure. How much money are they willing to spend on themselves? That is, in my opinion, as we start rolling into tech ER season, that is, CapEx is the only thing that we care about. I don't care about revenue. I don't care about any of that. I care about their CapEx guidance. That will be the only thing I read in the coming earnings reports, because, you know, we have companies spending hundreds of millions, billions of dollars.
Billions. Amazon guided for 110 billion in 2025.
Uh-huh. And
100
so
billion at the
they
top.
are willing to spend on themselves and invest in themselves. You know, we saw it with AI. You know, Nvidia can't keep up with chip production because everybody needs the Blackwell chips because you need AI now. Well, if all of a sudden they say we're cutting capex spending, we're dramatically reducing capex spending, it's worrisome because, you know, it's always interesting to think, you know, Amazon might say, or Microsoft or whoever, we're cutting capex spending. It doesn't mean that Amazon's not going to go make billions of dollars anyway. It means that they might make a few less billions, but they're still making billions. But it just shows that they're less confident. And, you know,
Right.
what
They want
started
to
this for
stockpile more
me,
cash if
to
they
bring it
can.
back to what Tostie said, uncertainty. When there is uncertainty, the market hates it. As we've been selling, you know, for the last couple of months, you know, starting in January, my theory to people, and I was, you know, I was relatively open about it. No bottom with no answers.
Mm-hmm.
Until we get tariff answers, we cannot set a bottom. And so we see it on the charts, you know. Did we get answers on whatever Liberation Day? Kind of. You know, we got all of this stuff. The market got absolutely destroyed. And then he comes back and he folds on, you know, all of the tariffs. The 10% stayed, but all of the tariffs he folds on. And obviously the market rallies, and we haven't been back to revisit those lows. So my theory is temporary bottom is in. That does not mean we're going back to all-time highs. If anything, I think it means that we're going to spend more time sideways. You know, there's a lot of people talking about, oh, well, we finally printed an inside candle on the indices on the weekly.
Oh
Well,
yeah.
yeah, the previous candle's the biggest candle in history. So it's pretty hard to not print an inside candle. So I am not on the we're out of the woods yet.
When an inside candle means nothing too.
Yeah, I mean,
It actually is bearish in a downtrend, but
it seems like CNBC might be grasping at straws, you know. I mean, they're panicked. It has been interesting to see, you know, I mean, it is no secret to anybody. I am like the biggest blind bull around. I love to be bullish. I hate trading short in the market. I hate trading downtrends. Like I don't like trading puts. There's always just too much mayhem surrounding them, you know. I'm bullish. Well, there's a few people out there, your Dan Ives, your Peter Tuchmans, your Tom Lees, you know, they make me look like Michael Burry. They're so bullish. And we got Tom Lee. He didn't revise his SPX target down, but he said we might bring our SPX target down. This is the
he's probably
same
never
dude.
done that.
This is the same dude who halfway through the 2022 bear market increased his SPX target by 600 points.
Yeah, didn't he have a
So
target like 6,000
yeah,
and we were at like 3,500?
35, 37, something like that. And he's revising it up, you know. When
And he
somebody
was
like
right.
that
It's the crazy part.
yeah,
He
he
was
was right.
right.
He also longed IWM at 230 at the end of last year and said he was expecting a 20% rally on small caps, and he jumped on TV to apologize for how wrong he was because I think IWM's down maybe 30%. It's probably bounced. I haven't really looked, but it was clobbered, you know. So you got him coming out. You got Dan Ives. Dan Ives was the guy. He came out in I don't know, August, September of 2022. Chips were getting absolutely throttled. AI wasn't much more than a glimmer in anybody's eyes. And all of a sudden, here's Dan Ives, one of the most bullish dudes around, saying, I am getting heavily invested in the chip sector. And he clobbered it. You know, I think they hit Nvidia $90 or something, pre-split $90, something like that.
What was it, like 25 or
Yeah,
something?
and
Ish,
yeah, and
20.
so he just came out and said he is flipping neutral to bearish on Nvidia. And that's one of the most, I mean, you guys have probably seen him. He wears like pink shirts on CNBC, super loud guy, or like bright. You can't miss him when he talks. Him flipping bearish, slightly worrisome. Peter Tuchman, he's Einstein of Wall Street. I love that guy. A genius, just been there forever. So he's seen everything. And you watch his videos right now, and I've never seen him like this. The guy is like depressed. You know, during 2022, it was a very controlled, very safe sell-off for
Everybody
very,
knew what was going on.
and they told us, they started telling us at the end of 2021, rate
Right.
hikes are coming. It's time to deal with it. This came
Right.
out of nowhere, and he used, I mean, I love the terminology that Peter Tuchman used. He said, this is economic vandalism because it's completely self-inflicted pain at the decisions of one guy, you know? I'm not trying to debate whether he's right or wrong on his decisions or what he thinks the outcome is, but I know that for right now, people are getting clobbered, big businesses are getting clobbered, our financial markets are getting clobbered because of one person's decisions. And so
Right.
that's what's hard for a lot of, you know, the big people in the markets that are just saying, what are we doing? Why are we doing this? Really interesting that fact that I saw Citadel, largest market maker on the planet. If you place an order, Citadel has a finger in it. Think of it that way. Their finger is on the pulse of the market more than anybody else. They are red year to date. Um,
Wow.
First time in history for them, and they're red year to date. If the largest market maker on the planet, that literally an order doesn't happen without Citadel catching wind of it, you know, and they're red year to date, it just tells you how offsides the greatest financial minds in our country are. They
How
don't.
tough of a market is too. Like
I,
that goes beyond just having retail orders and their buys and sells on Robinhood, but that's fulfilling and negotiating dark pool agreements and
oh yeah,
large
I
fund
mean,
buys and sells and
yeah,
block
like if you want to
transactions and
buy
floor
a million,
trades.
you want to buy a million shares of SPY, you can't hop on Thinkorswim and place that order. Like the SEC will come knocking and say, what are you doing? You go to Citadel, you go to Susquehanna, you go straight to the DTCC and say, I want to place this order because those orders are so big that they will have an effect on the market. And Citadel's the one that can fill them. You know, they're one of three people you can call, four people you can call to actually get you a reasonable fill on that order. And they're red year to date. So it really just tells you how precarious things are.
It's not an easy market.
No. Oh,
If you are even neutral or
I've
flat
been
year to date, you're doing great.
I get asked about it, you know, VC's DMs a lot, you know, and people say, you know, like, what's up with this market, you know? And I explained it to them, you know, 2022, I mean, from 2020 all the way to 2024, it was beginner stuff. It was easy, you know. I mean, you could trade the data very easily, you could do all of that. It was day trading 101. We went from like day trading 101 in January to, you know, triple PhD master level of trading
Not
in
even,
the
yeah.
the matter of a week, you know. And it was even, you know, I got to point out up here at the top of Tostie's chart, you can see he's got a little wedge with those three big old gap downs. I was getting roasted in trade floor because I kept telling people, look at this price action. It is very bearish. Well, that one and the next one, the even higher wedges, as we're going to set new all-time highs. I'm telling people this is bearish. We're setting a new all-time high, and I'm telling you guys, this is bearish. And what was cluing me into that? No volume on the buy days. When sellers showed up, they hammer it. They
This new
absolutely
all-time high day is
clobber. Yeah,
crazy.
and they absolutely clobber the market anytime they are given a reason to sell. You know, it will grind up for 5 days, gap it all down in one day.
This was the
Yeah,
first red
yeah.
flag.
And so, yeah, bearish price action right there. So that was, I mean, as I said, I'm a bull. I'm very bullish all the time. I'm the dude who had the SPY to 500. You know, I'm making fun of Tom Lee. I had the SPY to 500 hat on when we're dumping.
480.
SPY's down 22%. We're
You
at
had that at
380
480.
on it,
You had that
and
at
I'm rocking
480,
the
and then
SPY
we
to
went
500 hat,
350.
you know? And I was flipping bearish. There was no reason to not be bearish heading into, you know, this administration. And then as they started talking, they started doing things. Guy sits down and signs 180 executive orders on day one. It was time to ease off the brakes on longs. Quit, you know, I'm not going to say that there hasn't been some extremely tradable dips over the last 2 months, but
100%.
you could have just waited for those bounces and then just shorted them and woke up 2 days later and been way happier with way less stress. Even me, you guys know I trade all day, every day. At the end of the day, I'm tired. like my brain has never had to work this hard trading, think about what's going on, be looking back, okay, what happened here a week ago? What happened here last summer when we were trading these levels, and try to wrap your head around everything in the market while basically day after day it is making record-setting moves. This market has been obscenely difficult. I mean, we've seen it in trade floor. People got bad attitudes, I mean, people are having a very hard time in this market. If you survive it, you're set. Every trading will be
Right.
the easiest thing ever once all of this nonsense ends. And it'll be great for all of us. It'll make our lives just so much easier. We'll make more money. I mean, I hit some spy calls the other day, caught a $7 rip, made 61%. Like, what a waste of effort and time, like it's
I think
like,
that's the most important point too, is like
yeah,
the market will go back to the way it was in some amount of time, right?
yeah,
3 months, one
yeah,
month, 6 months, doesn't really matter.
yeah,
But this is where like money is actually made. If you can just sit back, shut up, study and learn and trade small or don't trade during this
yeah,
time, you will be hundreds of miles ahead once the trend resumes to just normal.
yep. And
Doesn't
it'll
even
be
need to be
just so
up,
easy, and it'll just be so easy,
right?
that's like, this market is hard,
Very
I
hard.
got friends that are good traders. And that a very good friend of mine, he's down 2 million. I mean, and he's an unbelievable trader, and he's down 2 million. I mean, it's this market is not friendly to people at all.
No.
Even, from good traders to like, God, imagine being starting 2 weeks ago and you're just learning about the market. Like, I don't even know what to say. Like,
Yeah,
what
you're
an exciting but absolutely terrible time to dive into the market. So I see a question. Do I think there's a chance a repeat of the Great Depression is coming? let me I want to put out something blanket just based on some of the things I've said.
yeah, I
I
was
am
waiting
not
to
trying
answer
to
this
be
one.
gloom and doom. I am not. We can fix this. We can get out of this. We hit the abort switch, we're good to go. And so, you know, do I think a depression is coming? No. But do we have some of the things that can lead to one occurring? Absolutely. But recessions come but long before depressions. I think we just need to be prepared for, a weaker labor market, slower growth, those kinds of things. I'm not saying, the end is near or anything like that. I do think the market's going to have a hard time getting upside, but there's just so much uncertainty right now, where things can either go fine or horrible. We can get absolutely destroyed. I mean, we're just walking the tightrope between the two of them. Do I think a depression is coming though? No. I mean, I don't. I don't think that anybody would let it get that bad.
I
There
think
are,
something that's really important to be mindful of too is that like nobody should be in the game of predicting what's going to happen, like even predicting how good or how bad the impact of tariffs are, because there is some people who are in the court of thinking that tariffs might be a positive, and that's great. And there's people who think tariffs will be a negative, and that's great too. And there's people who think we're going to be in a recession and think the economy is going to be great. But none of those predictions really matter. Just listen to what's going on in the news and continue to pay attention to price and how it's reacting to the news, because nobody's opinion matters. Like even if River just came out and said, "Yep, we're going into a Great Depression next month,"
yeah,
that doesn't matter, right? It doesn't
no,
care. It doesn't matter what the hell he thinks. And I could say, "Yep, we're going to go into the best economic period we've ever had next month, and everybody should get long because of that." It's like, well, your opinion matters so much less than it does in normal markets, and your opinion doesn't matter too much in normal markets. But at least you could have a more structured opinion around the
you
data,
can
right?
base an
But
opinion on some certainty, and that's the
exactly,
issue
yeah,
right now. Nobody knows,
nobody knows.
yeah. There are some things that are terrifying, though. The bond market, nobody pays attention to it. I get it. It is boring. It is extremely difficult to understand. Um, a lot of people don't know this, but most of the I won't say most. I'm gonna make up a number. Feel free to double check me. 30 to 40% of the money in the world is actually involved in the bond markets. I believe the bond markets are worth around $140 trillion. And there's 400 trillion total, currency around the world. and 400 trillion, or, about 400 trillion total, and 130, 140 trillion of that is wrapped up in the bond market. Uh, there
I
you
don't
go.
know if that's
100,
true.
119 trillion.
Maybe.
Close enough.
Yeah.
Yeah. And that's
Maybe.
2021.
Yeah. I
Yeah,
don't know.
that's
Yeah. Who
2021.
knows?
And
This
we
was
know we've piled
140
on debt since
trillion.
then.
Yeah. This was
Yeah.
140 in 2023, but this is
Uh-huh.
the AI. So I don't know.
Yeah. So yeah, again, always feel free to fact check my numbers. I'm trying to pull them out of my head as best as I can. I'll never be offended. The concern is now, and we saw it, China started selling our bonds. That's what that
Mm-hmm.
drop is, weakens our dollar, blah, blah, blah. I mean, the DXY chart is insane. China started selling our bonds openly. People always try to talk about, oh, we have so much foreign debt. We don't. We got 36 trillion in debt. Our largest debt holder is Japan. I think they're sitting around $1 trillion.
No, I think
China's
they hold more, I thought.
it could be just a little over a trillion. China's sitting about 800 billion.
Oh, no, you're
UK's
right. You're right.
UK's got a bunch. Yeah, there you go. Yeah, I knew UK had a bunch. As far as foreign debt, it's not most of our debt. Most of our
No,
debt
it's the
is
US.
domestic.
Yeah. By a
Most of our
mile.
debt, Social Security, those kinds of things, Medicaid, Medicare, all of that.
The Fed.
Yeah, yeah, and so there's some debt out there. And so the bond market is the fear. Bond market gets clobbered, which it can. Fire Jerome Powell, the bond market will get destroyed. It will demolish the American dollar and the
Well,
and,
especially if
and
somebody's just installed in that position that
yeah,
shouldn't be there too. It would
yeah.
be
So if Powell gets fired, that's horrible news. If China decides to sell a large portion of our debts, I don't necessarily think they will. That's really bad news. And the issue with a weakening dollar, and also trying to become a manufacturing powerhouse, the issue with that is you need a strong, relatively stable currency to be the reserve currency, which we currently are. If we get into, more debt, weak bonds, weak dollar, and manufacturing, that leads to a serious lack of trust in the American dollar. And right now, the American dollar is the most trusted currency on the planet. So there's some scary things deep down in the economy that are well beyond my understanding. Well, unless you've studied it, the bond market is really, really hard to grasp it all. But there's just a few things out there right now that, we don't want to see a super weak dollar. We don't want to see that 10-year either cratering or going to the moon. We of course want the 10-year down a little bit, but just so we can have some cheaper debt. Right now we're hating paying this 4.5% debt on a 10-year, 5% on a 30-year, that, or 20-year. I figure both 20 and 30s are close to 5. I know they're uninverted now. So we don't want to pay that much debt on it. I see a question here. You have TLT puts for June. It's valid. Short the bonds. It is valid. But if we do some things that are, very inflationary, we can start to see some very large moves to the upside on that. So, both TLT, 10-year, all of them, very difficult thing to trade based solely on technicals because they trade solely on fundamentals.
right.
And so you know, you're in a market where you could see a very, very large payday on some shorts there. But you can also see a turnaround and absolutely fly. And it's just how much faith do people have in America? How many bonds do they want to buy? Are people selling our bonds? How strong are the bond auctions coming out at? Are we seeing good money roll into them? We saw it a few days ago. Whatever the
I feel
day,
like
whatever.
bonds now more than ever though are in such an interesting spot because normally it's pretty easy. If you sell equities, bonds are going to get bought. It's a reasonably inverse relationship. But
Yes.
now selling US equities doesn't necessarily mean money's rolling in straight to bonds because they're worried overall about the US, not
Yeah.
just US equities.
Yeah.
So it's much more complicated now, honestly. I
And
don't
like
even
just
really understand
and
it.
the amount of money is where it gets a little worrisome. So I mean, you can actually see it. So on the whatever tariff pause day was,
It was the
um,
7th question.
go to like the 5 minute chart or something. Yeah, go to the 5 minute chart if you can find it on um I mean, you
You
can
look
find it because that'll be
on.
the biggest ripper ever. Okay, so do you see those? Do you see those two candles before the giant ripper? Big green one followed by big red one. Obscenely strong 10-year auction. That was people pumping that to get out and get short. No questions asked. The market was about to get clobbered, in my opinion. Based on how strong that 10-year auction was, it was a very obvious flight to safety occurring. I think it was $80 billion. There's a thing called a tail. It's how much did people,
Mhm.
what percent did people think they were going to get versus what they actually got? Tail was tiny. I mean, the demand was there. That market was about to get clobbered. Then, and you can see the big old spike in volume. Then, out of nowhere, we're pausing all tariffs and we go on a 50% ripper. And we even get a tweet about the bond market right after that. How good the bond market is doing. It's not doing well at all. But we got a tweet about how good the bond market was doing directly after an extremely strong bond market that or auction that we didn't want to be extremely strong, you know? And so it is always interesting how, you know, somebody asked this earlier, will news override your trade plan? Every single time. You can be
Right.
the best technical analyst on the planet, and the president of the United States comes out and says he's pausing tariffs, which in my opinion is the largest, most influential economic decision I have ever been a part of while trading in the market. I have never seen something that important happen. And obviously we ripped $35, $40. So the market agreed with that. No matter how bearish you were, how perfect your technical analysis and your fundamental analysis was, shorting
Right.
that auction, you died. You
You
got
could have shorted this, failed breakouts,
yeah,
failed breakout or double top, and
yep, yep.
you got smacked.
You got the most epically smacked in trading history, you know? And then it's funny. So if you want to zoom in, so we shorted that. We shorted the bond
You
auction.
did?
Yeah, in voice chat. We shorted the bond auction, made
That's
money.
awesome.
So we make money. And I'm like,
You
okay,
shorted
you
this.
know, I'm like, yeah, cover that. No, we shorted the top of that green candle.
Oh,
I read
nice.
I read the bond auction as it came out and I was like, short this, no questions asked. Short this pump. And so we shorted it. So we made some money. And then all of a sudden, I see time and sales on SPY flashes 70,000 filled. And I was like, okay, close those shorts, you know. I was like, I might actually hit a long right here. So I hit a call. Okay. Very next candle, that little tiny one, stopped out for a loss.
Wow.
Yeah.
Just on that little wick.
Oh, dude, it was at my fingertips, you know.
I mean, this probably would have taken you
That would
out
have
too.
got
I
me
mean,
no
this
matter
is this is
what.
a
But
four
that one
dollar,
happens,
$5
dude.
bar.
That wick down. It was so funny. There was somebody in voice chat, and I stop out, and then they asked me a question, and then that wick down happens, and I was like, "Wait, something's going on." And I open the news thing, and I see they release news raising China tariffs to 125%. That's the knife.
That's what came out
And
first.
then boom, all other tariffs on pause. And I was like, we were just watching it live, you know. I was just like, okay, I got to quit answering your questions right now and watch this market. And then I was trying to get filled on the way up because easiest long ever. $700 widespread on SPY calls.
Wow.
I've never, I've never, there was a, dude, we had a bid at 400, and the ask was sitting at 1100.
On same days?
Yeah, it was the most, I've never seen it.
I didn't see that, and I think I took a screenshot of the options chain like that same morning because I was just so surprised at how high volatility was.
Yeah.
That's such a good example of how crazy it is trading in this market. And for Cat, I think that just started this week. This is one of the crazier times to start trading. Yeah, I think that's been made pretty clear at this point. But it doesn't get any wilder than this, I don't think,
No,
outside of a full blown market crash, which some
And
might argue that we have seen some
I would,
similar
I would,
action.
this is a market crash. You dump the S&P 20% in under a month, that's a crash. Like you'll never convince me otherwise. I mean, look at that gap, look at that move down from the like 560s or whatever they were,
Yeah, that was
all to
wild.
480 in 3
3
days.
days. 3 days is
It's a
wild.
market crash. Like that's a market crash in my opinion. There's no way to add it up because I know the move from, high to low percentage wise is smaller, but that high to that low is 10% or more in 3 days just on its
Yeah.
own.
That
The
just doesn't
560s to
happen.
480s, like it's just, it doesn't happen,
It's not a normal
No,
thing. And I think that's something for you to be expressly aware of, Kat, is this is a market where, you can definitely learn a lot and you can get some really great experience from it. But you can also lose everything
everything.
very easily,
Yeah.
like much easier than normal.
Yep. Yeah. And that's just the risk that's so high. And that's even what I've been explaining to people. I've taken so many less trades than I normally do. I'm making
Oh,
less money than I normally do because these moves are making it hard. You're going to sell me a same day SPY call, $2 out of the money for $675 and I got 30 delta on it. The risk reward is horrendous. Then with how the VIX and everything's moving, you might catch your dollar move up and the VIX get crushed so much on a buck, like a $3 up candle that the VIX get crushed so much you might make $35, $40. You're getting a third
right.
of your total delta. And if it goes against you, you lose $100 on a $1 move down. So it's like, I mean, this is mayhem. Actually, for the crazy, the last 2 weeks or the week of mayhem, I was focusing on TQQQ and SQQQ and trading shares. I
Yeah,
hit a 25% share trade on SQQQ in a day.
that's
I mean,
awesome.
and like it's not, it's like it's
Wow.
just mayhem out there. Like, I mean, it's mayhem. You go listen to the Wall Street people that are like working in it and you look at them and they just look panicked. I mean, it's insane. And what they probably did 100% off lows, something like that.
Yeah, 120.
Yeah. Uh-huh.
Yeah, what I've been looking at more is the SPXLs and SPXSs. That was one that
Mhm.
Shark was trading back in 2022, and ever since then, I've never really touched them, but I've always
Yep.
kept them in the back pocket. I feel
And I
like shares
recommended
are
those
the
to
best
people as
way.
well.
Yeah, shares are the
They're
best way that you can trade this market, in my opinion.
yeah. And
Like,
you
why
got
take the risk? Why
and you
take
got
the
to
risk?
size a little different, but like your risk is so defined
And
on.
honestly, you don't need to size a little different, in my opinion. Like, this isn't the market to have your best day ever. This isn't the market to pay off your house. This is the market to preserve capital.
Yep.
That's what all the best capital managers and investors and traders are doing right now. They're protecting their equity curve. They're preserving their capital. They're not just fully invested, trying shit every day trading, scalping. It's not what they're doing. They're protecting their capital, taking less trades, taking smaller trades, taking hedges, taking no trades. They're slowing down, which is the same thing that everybody should be doing, but it's what 90% of, unfortunately, this group is not doing,
Yeah.
which is
People don't.
fine, whatever. But
But
anyway,
man, I'll tell you what,
that's
my DMs are a war zone, man. When I have a DM from somebody I don't know, I'm just straight up scared to open it because I know that there's like a 99% chance that
their money's gone.
their money's gone to
Yeah.
SPX.
Mm-hmm.
Mm. Yeah. Yeah. It's
Yeah.
just
Not the market to, should you go back to paper trading then? Yeah, I mean, it's definitely not a bad market to paper trade. I think fundamentally, one, like the biggest issue that I have with paper trading is that people treat it like it is fake, which is fine. Obviously it's fake money. It's not real. It's fun to be able to have $200,000 that you can trade with, but you got to treat it like the real thing. And in this market, the way that I would be paper trading is one contract or one share, and just practice your entries. Right, practice where you're setting your entries, where you're taking your stop losses, and practice that workflow because like that's the best that you can do. And honestly, in my opinion, at that point, my preference, I think, in this day and age, is just to trade, one contract, one share of a real money with an amount of money that you're not afraid to lose. If you're not afraid to lose a couple $100, trade a share or two a day and use that to practice your entries and exits and trade management in a market like this. Because the real money just does help it give that kind of emotional attachment because there is an emotional attachment, right? You don't want to
of
lose
course.
money and
Yeah.
you're happy when you make money and you don't have that when you're paper trading. And that's a big weakness of the paper report, a big benefit too, right? Then because you can't lose money. So
And
yeah.
what I've told everybody lately, and I mean, everybody knows when I trade with very tight stops. My entries are the most crucial thing possible. Same thing in this market, but size down, widen stop. Whereas my
Mhm.
normal trades might have a 30 or 40 cent stop, 50-cent stop on them, something like that. On, on a downside move on SPY or whatever. Right now they're $2, $1.50. I mean, when every wick of the day on something like SPY, when like, you might like, it's been so interesting in voice chat where people are saying like, oh, like SPY's not really moving. And I'm like, well, that's because we are so zoomed out on the charts because we're making $30 moves that you don't realize the wicks on those candles are like $3, And so in that like mayhem time, that's what I had to do. I'm still shooting for my best entry possible, but you're putting up 200 million volume days on SPY, you're getting $2 wicks. You can't run the tight stop. You gotta let them work a little bit. And you still do your best to take the best entry you possibly can, but it can be right, but it's right after a $2.50 wick against you where you're like, oh no, this is it, I'm done. And then all of a sudden the wick's gone and you're in the green. I mean, you just have to like, it's been insane. I mean, it's been insane. And I have some
Right.
experience at this. And like I said, at the end of the day, I'm like tired. Like I'm beat. I've thought so much more than I normally need to.
Well, yeah,
Because
it's
it's,
mentally exhausting. There's
yeah,
so much more to care about now.
yeah. And like since how I trade, like I trade SPY, QQQ all day long, but I trade them based on Apple, Amazon, Microsoft, Nvidia, XLF, XLE. Those are the charts that I watch all the time. So when those charts line up with the technicals on SPY is when I put on a trade. If those all line up at the same time, you can still be so spectacularly wrong or right in this market. And trying to watch all 6 of them with the mayhem that is occurring every single day, man, it's just got me beat at the end of the day.
Right.
Mr. River even called me out and told me to take a nap the other day because I looked like dead. After that $50 Ripper day, I was dead. It's insane.
One of my favorite things that I learned recently, River, I don't know if you've heard this before, but dividing the price of the VIX by 16 gives you just an approximate estimate of the expected move in the SPY. It's not perfect, but if we take 29.65 divided by 16, that tells us that the market's generally expecting the S&P to move 1.85% per day. And when we were up at 60, or I guess where we stuck around a little bit longer, 50, we'll just do that, 50 divided by 16, market was expecting a 3.125% move. Compared to when the VIX is sitting at 16, it's expecting basically a 1% move on the high end every single day.
Every
So
day. Yep.
the market's basically, and have you heard that before, River? I can't
I
remember if
have
you
heard
and
that.
okay.
I've heard a couple different numbers, but yeah, that's great.
Yeah, I
And
mean
then how I
it's
use
not perfect. It's just an estimate, I think. But
Yeah.
yeah, I saw that and I
And
was
then
like,
how
oh,
I
that makes
use the
sense.
VIX and what I always recommend to people, because it's calculated on this front month, a strangle of the front month SPX contracts, the next monthly
Right.
contracts expiring. How wide is the spread? That's how high the VIX is. And so the other thing we can take from that is it tells us the move and the range that the market is pricing in over the
Yep.
next 30 days.
Mm-hmm.
So when we're at 30, the market is basically being predicted as being up or down 9% over the next 30 days. Could be up or down 0% by the time we get there, but be prepared for basically a 16% range on SPY from where we sit when we're at 30, And so it's mayhem to think about.
You can also see that too in the IV of the SPX contracts, where it's sitting at about a 350 point implied
Yep.
volatility,
Uh-huh.
which I can't do that math off the top of my head. Let me check that. I don't know. We'll just say 5,200 divided by 5,600. Would that give us something? Yeah, so like a 7-ish% move. That was super crude, but expecting
Exactly.
a 7-ish% move in
Yep.
30 days,
Yep.
which remember that the average return of the market is what, 9%
In a
over the
year.
last 100 years? Yeah.
In a year. Yeah.
Yeah. So a 7% move expected the next 30 days is ridiculous. Whether it's up or down doesn't matter, but the volatility is so incredibly elevated. And River glossed over it a little bit, but I don't think you're so used to talking about it, River. But when IV gets higher, the price of an option contract significantly increases. That's that rho piece of the Greeks. And every 1% that IV increases, your contract's going to increase by X amount of dollars. But the problem is, generally speaking, in a bear market, IV is going to work inverse to the market. So as the market goes down, IV goes up. As the market goes up, IV goes down. So the problem is when you're trading calls in a bear market, you now have two things working against you all the time. You have IV working against you. If you get a bounce, IV is going to drop. And you have theta working against you. As you wait more time, the contract's just going to get eaten away over
And
X amount of periods.
And theta's the tricky one because people always try to say, oh, I'm getting theta burned when
No,
they're
you're
in a
not.
trade for 15 minutes. And it's like, no, you aren't. You took a terrible entry. Don't blame theta because
Yeah.
theta is a rate over 24 hours. So
Right.
if you hold a trade for 15 minutes, you're generally speaking going to be losing like a couple of bucks of theta. It's not
If
actually
that,
hurting you.
unless you're at
Yeah.
close, like
Well,
yeah.
now when we're on same days,
Well, yeah.
and the same
Today,
days cost,
yeah, today.
and they cost $600, and the
Sure.
theta is $600, and
Sure.
all of a sudden you're losing, you know, 10, 15, $20 every half hour. You start to notice like, wow, I just lost 5 or 10% of my contract just by holding it, you know, because
Yeah, that's a fair
when
point.
the contract is valuable and the theta is high, it will start hurting you, you know. But generally on our same days, and they're $50 and you got 50 theta, you're only losing
And it's
2
9
bucks an
a.m.
hour.
You're gonna lose.
Yeah.
Yeah.
Yeah. Don't blame theta,
No big
blame your
deal.
entry, you know, always.
There you
But
go.
then in this, that's, you know, you're right. I did just kind of go over. That's what I was talking about. You know, we get some $600 spy calls, catch a $5 rip and make 30% because, you know, IV, Vega, VIX killing us, you know, that's, I mean,
When normally a $5 rip is 100, 200, 300%. Now it's
1,000. I mean, 1,000%, you know, you're up. If you catch it like a $5 ripper on SPY is like a done for the week kind of trade, you know.
Well,
And
that's what it's supposed to be, but that's not how everybody treats it.
And
That's the
right
first.
now it's
That's
like,
that's the gambling money for the rest of the day for most people.
yeah, I guess so, huh? That is the truth.
Not that it should be, but that's how it gets treated.
Yeah.
Any other questions? This was a really fun discussion, River. I mean, I don't know about you guys, but I personally learned something from River today. I mean, I thought that was really cool to hear what he had to say about the data and yeah, very interesting stuff. And also the day trading perspective. I appreciate that because it's not something, especially now that I don't get super involved with. I mean, River knows this more than anybody. When I start day trading, that's when the problems start.
Yeah.
So the more that I can stay away from that, the better, right?
Tostie has to stay out of like, you know, degen trigger areas, which is day trading for sure, you know, that
Well, yeah, and it was funny. I was in there's this facility I go out and visit in Texas every few months, and the first time I went to visit this place, I had a situation where I got heavily involved in Roblox shares and calls. It's a long story, but basically every time I go back out there, I got to talk to River, and I'm like, oh, should I try it again this time? You know, I'm back out.
the repeat.
I'm back out here. Is it a good time?
Yeah. Pretty good.
I haven't done it since I learned my lesson. So
that's good. Yeah, you learned you learned a hard lesson on long.
That was so
double long leverage long on a kid's game for some reason, not the move.
It was the double leveraged long, and then I was asking you if I should average down, and I didn't tell you how big I was in, and you're like, yeah, you could. And then I did average down, and then I told you how big I was in, and you were like, oh my God.
Yeah, no. Had I known that, the answer is no.
Yeah, that was some of the worst behavior I think I could have possibly exhibited.
Yeah, that one gave us a good laugh.
That's cool to hear, Dippin and Johnny. Yeah, I mean, usually River and I don't get along too well, but once we get in the professional environment, we end up having these real nice conversations.
Yeah, don't be tricked though. I hate Tostie.
We're not cool.
I cannot stand
the more time we spend together, the worse it gets, I think. But I mean, honestly, River just being here, it makes me want to go to his lectures more. I haven't done that in a while. River knows when I used to pull up, I had some alternate egos that I would arrive to we could call it that, arrived to the course with. So I'll probably have
Can we talk about your trend? Can we talk about this trend line on VIX?
I'd love to go find our messages. Let me see if I can find them real quick because we had some funny messages about this.
I think they
Let me.
were in charting. Weren't they in the charting tab? Is that?
No, 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 no. I DM'd you it. Hang on.
Oh God. Well,
Let me find it.
make
Hang
sure
on.
you proofread them before
Yeah,
you
yeah,
share
yeah,
those on
yeah,
the
yeah, yeah,
recording.
yeah, 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 yeah.
Uh,
All right. Yeah, this is good. This is good. All right, here, I'll do this. Oh, I can't do it. I
yeah,
can't
I
do
had
it.
a
I
feeling you were
can't.
not going to be able to share whatever is on there.
I can't do it. Yeah, I can't do it. Well, I have a little bit that I could share here. We'll do this. How do I pull? Oh, I got to do this. Hang on. This is a fun part of what I guess turned into a podcast. This was River's response to me posting a trend.
Yeah, that's how I actually talked to Tostie behind the
Yeah.
scenes.
Yeah, this is how we're talking to each other. I said, "You are down horribly." Oh no. Here, I'll show everybody this conversation
It's
because
fine. Whatever.
this is pretty funny. Yeah, we'll put it on recording.
Yeah,
This
I
is
love
pretty
it.
good.
Oh, wait, dude, you were yeah. Yeah, that's because you guys are buying Robin Hood. Yeah, that was a bad one. Man, I tried to tell you not. I told you guys
Hey,
please
I
don't
didn't
buy
lose a
Robin Hood.
dollar. I didn't lose a cent. Well, yeah, I sold. I got out of there. I can't speak for Anthony though.
Dude, but could you believe my call out where I told you guys it was at 38? I told you
Yeah, and you said wait for 31.
wait for 31. Later
Same
that
night
day,
it
it's
hit.
at 31 or 32. Yeah, later
Yeah,
the
that was
day.
that was good.
That
That
was a
was good.
really
Yeah,
good.
that's a
Dude,
fun story. Yeah.
you guys said very rude things to me when I said that.
Yeah, I bought, where was it? I think I bought Robinhood. Wait, where was it? What am I looking at?
Keep going. I think. Oh
Oh
wait.
yeah, here. Yeah, yeah. So I bought Robinhood right here at 38. And I was like, oh, I was super happy. I got the better entry than Amp. I was like, screw you, dude. You're in at 48. I'm in at 38. And River's like, you guys are both idiots. Wait for 31. And that same night, it hit
It
32.
was down 20. It was down 20% after I said wait for 31.
Yeah, let me see if I can find
Uh,
that conversation. That was a good one. Let me
that was a
see.
really good one.
I just search up
You guys
31.
did not agree with me at all.
No, 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 no.
MMA did not
Oh
agree
yeah,
with me. He
this was
hasn't
good.
posted an OOT since that day.
This was good. This was good. This was good. That was the buy.
It's 31. Dude, I gave it to you guys. I did give it to you, man. And that
Uh,
entry at 31, that would have been sick, wasn't it? Like 40 or 32, wasn't it like
oh, it would
42
have
a
been
few days later?
huge.
Yeah.
Oh, it would have been huge. Yeah, that would have been an absolutely insane entry. If you entered here, that would have been a 40% ripper in days, dude. Oh my God.
That was a nice one. That was a nice
Yeah,
one.
you and I gave a support and resistance lecture.
Well, no, did we? That's
I
cool.
guess that's what Dippin's saying.
Yeah.
Thought we were best friends. No, we're
Well,
not.
Toasty
We're
thinks we're
not
best
friends.
friends, but I absolutely hate him so
We are
much.
not friends. We are not friends. Oh,
Beginner
beginner
course.
course. That's
I,
awesome.
did I jump in there with you? Or was
Must
it
have,
mine?
yeah.
Or did you join in mine?
No, I wouldn't have joined yours, and if I did, you wouldn't have let me talk.
That's very smart of me.
Yeah, you would
But
let
all
me
jokes
talk.
aside, I love Toasty. He's just, he's like,
No, we get along great. And yeah, River, we can try and find some more excuses to do a class together. I love listening to the things that you have to say. I enjoy it because you won't talk to me unless we're in lecture. I try to
yeah,
talk to you outside of
I got
lecture,
your
and you won't.
DMs muted and your phone number blocked. But
Yeah,
it's good
you
that
blocked
way.
my phone number. Oh,
Yeah, I
that's
did block your phone number a while ago. Yeah,
couple
yeah.
too many phone calls, I guess. Kat has an interesting question. What should you study first as a newbie trader? I want to think about that question a little bit because I don't have
Dude,
a
Toasty's
snap
beginner
answer.
course. Dude, teach your own horn. Like, I'm sorry, 90% of information on YouTube is garbage. Anybody who you think is a good trader, probably paper trading. Don't listen to them. If you want beginner stuff, I'll toot my own horn too. Listen to mine and Toasty's lectures. like
Yeah,
we're
I
we're
like that
like
answer.
you know, like don't get me wrong, we're both kind of idiots, but like we know what we're talking about. We have
At least
proven
we're good at acting
results.
like it. At least I'm good at acting like
Yeah,
it.
we can pretend we know what we're talking about really good, and they're they're good. They're great. They really do give you the foundation for what you need. No
Let me see if I
matter
can get the
what,
link. I don't.
trading's not fast. It is not something you will pick up tomorrow, or the next day, but time and effort gets you there. You know, everybody's like, I've traded for quite a while. I still make mistakes. I still do dumb stuff. You know, I still do these things, and I've done it for a while, you know. Watch his lectures, watch my beginner course thing. Raphael, he made it, I think I got it pinned in my tab. Watch
Here,
him.
let me post that
And
link too. Let
and
me find that.
the other advantage to watching our lectures, and again, I'm not trying to like toot our horns like we're the best traders ever, nothing like that. The other
No,
advantage
because
to
that's not
watching our
true.
lectures, you can watch it, and when we say something, you can message us and say, what does this mean? And we can give you an answer. So you can watch the YouTube people, you know, picking and choosing their trades that they show to make them look like they're really great traders, but you'll never get a response from them that, you know, will give you real answers. If you
One of
watch
my
our
favorite
videos,
disclaimers too, River, sorry to interrupt you,
yeah,
that I like in my lectures is literally anybody can go back, even me, even you can go back on a chart. And this is one of my best examples and say, look at all these places you could have got long, right? You could have got long at this flag break, this gap up here. You could have got long in the belt to this level. You could have got
yeah,
long in this breakout. Anybody can do that, right? And anybody can act like they took that trade. But
yeah,
the important thing to be mindful of is when you study these examples, you can learn how to find them the next time they happen
the
because
next
there's
time.
going to be names like this that do the exact same thing. There
Yeah,
always is and there always will be. So
yeah.
it's about studying those examples and learning from them. It's not
And
about saying,
that's
look what I
trading,
did, look what you could
repetition.
have done.
Yep,
Right.
and it's all repetition. And I give the same disclaimer in my classes because, you know, I mean, my classes are they're heavily technical analysis focused. That's what I like. That's what I teach about, you know. I give the disclaimer in every single one of my lectures where when we're going back and we're looking at charts and we're looking at things, we are hindsight trading. Don't get me wrong, since we trade in voice chat, we get to like look at some specific examples of maybe trades that we've taken actually and say, this is how we executed them. But when you're hindsight trading, you can go say, oh, look, I would have bottom ticked the market because of this. Well, anybody can say that, you know,
Right.
did they actually do it? Who knows, you know,
Right.
but go back and learn. That's the important thing. You know, when we like, you know, just like Toasty said, when we go look at these charts, and how I always say it is we get to pretend we're the best traders on the planet. But when the market's moving, that's when it's crunch time. You know, will you make the decisions you need to make when the market is actually moving? Super easy to go back and look at charts. Always go back and look at charts. Always ask yourself, what could I have done different? Why did I stop out? Why did I take that entry? Don't dwell on it, learn from it. And then when the next day comes, you can say to yourself, oh, I've seen this move before. You know, I know what to do here.
Mm-hmm.
And you'll start putting more and more and more trades like that together. You'll start realizing who cares if you bottom tick? Who cares if you top tick? You
Doesn't
want
matter.
you just want a little meat off the bones in the
You
middle,
need
you
the
know,
bulk of the move. That's it.
like I always tell people, I don't want to be the first person in the trade. I don't want to be the last person in the trade.
No.
Anywhere else, and I'm happy. Do we hit an epic bottom tick on occasion? For sure. But we aren't looking for it. We're taking that trade because the market told us to take that trade. We did hit a mind-blowing bottom tick the other day. That was
Oh,
sick.
here we go.
That was sick.
Uh,
But they're rare, you know. Do you want to see it? Were you gonna
yeah,
go
why
looking
not?
for it?
Yeah, I
Pal
was
day.
gonna go looking for it.
Go for the pal day.
I don't even know what day that was. I haven't been paying
Yeah, that
attention.
that down day right there. Yeah,
Oh,
two
right
days
here.
ago. Yeah, zoom in on that one. We filled around 520 and 40 cents on longs.
520. Oh my God.
Yeah.
Why? What got you in it?
Trend line. So from the big breakdown right there, you know, under your level, no to the
What?
right, your white level.
Yeah, you're
Now
drawing a
draw the
trend
trend line
from
down to the lower
here.
high. Okay. And now you don't really have to do it like you don't really need to draw them. If you pull up Apple, Amazon, Microsoft, Nvidia, every single one, similar trend already broken out.
Kinda.
Yeah. Yep. I mean, breakout retest,
Mm,
breakout
yeah, I
retest.
see.
Now
Yeah.
now go
And almost like a
Amazon.
little double bottom too.
Yeah, I think Amazon, if I recall, was the shitty one. It had broken earlier and was kind of doing a little sideways action.
Yeah, it looks like it.
Might have been Nvidia. I don't remember. But same trends on all of them.
Mhm.
All breaking, all doing the same thing, all broken before SPY broke. So I was eyeing it. We actually tried one little earlier one, and look at them all just giving breakout retests. I mean, this was a long that the market just dished out and was like, here you go, buy SPY calls. You know, I mean, it was just one of those. And then, not to mention, 520 is a giant level. So,
That's a nice close on that bar too.
oh yeah, I mean, dude,
That helps.
the market was saying long me, for sure. You know,
I
as
mean, you could have
and
even waited. You could have waited too for
yeah.
this next one.
Oh, they did. Oh yeah,
Yeah,
because we hit those early ones. I took them to the trend. On if you go on SPY, so
right.
I hit those early ones, took them to the trend, a little bit over it. Said cash them. We're buying SPY calls on a $16 down day, 30 minutes
Yeah.
to close. Cash them. Next candle gives us that pullback. I said I'm trying them again. So we did take the second entry basically right around 521,
Okay. Yeah, that makes
which
complete sense after
which
you've seen some bars
obviously
like
those
this.
ones which
Yeah, I'm
obviously those
assuming,
ones worked.
right, I'm assuming the rest of those names closed the same way pretty soon
Oh,
after. So
yep,
yeah, okay.
yep. And so it was.
They weren't able to hide what was going to happen there.
Yep. And so that was one of those ones where, you know, we just so happened to bottom tick the market. That's not the normal case, you know. That was just one of those ones where it worked. But then, you know, 90% of the time you go bottom fishing like that, you're gonna get blown out. But that was just one where, you know, for how I trade and for everything that I watch in the market, it all lined up at the exact same time. So I watch Apple, Amazon, Microsoft, Nvidia, XLF, XLE. I got like 40%, 50% of SPY covered just by watching those six charts. You know,
Hmm.
could you watch your Googles? Sure. But I picked Apple, Amazon, Microsoft, Nvidia because they tend to be the market movers in SPY. Google, it does its own thing. Tesla does its own thing, you know. AVGO, Ripper, obviously, but doesn't like AVGO kind of does its own thing. For the ones that all work together and really move the market, in my opinion, it's Apple, Amazon, Microsoft, Nvidia. Then you check on XLF, so you get all of the financial sector. Then you check on XLE, you get all of the energy sector from it, and suddenly
And then you check T.
you're watching most of SPY. You're set, you know. Oh yeah, and then you watch T, of course, because it's the market hedge. Look at that thing's chart, dude. Pull up T.
I've been seeing that one. Yeah,
Yeah.
there was a question on why you check those names, and you basically covered it. It's they make up the S&P by a large majority. I mean, these names right here are basically 20%, and they're even heavier in the Nasdaq too,
Yep.
around 30 to 40%. So I mean, it's
And
very
so when you get, that's how I trade, you know, I of course stream my SPY chart and everybody sees my SPY chart or whatever. I'm watching all of those. And when the technicals on those line up with a technical on SPY, that's when I put a trade on. For all of my trades, for every single trade that I take on SPY, I do that exact same type of analysis. Obviously, I already got all my levels. I got my intraday trends drawn. I got a couple screens. So I'm lucky enough that I get a glance to the left where I got Apple, Amazon, Microsoft, Nvidia. I can scan them in 5 seconds to decide what I think of them. I know not everybody can do it that quick. You'll get there with time, you know, but I can glance at those real quick, know where we are, look at my little small charts of XLF and XLE, look for double bottoms, trend breaks, those kinds of things, and let the market say, all of these things want to bounce, SPY is going to bounce, you know, because we hear it all the
it
time.
has to.
Why did SPY bounce there? It's got a mind of its own. One thing that SPY does not have is a mind of its own. You know, it is the sum of its parts. That's it, you know, and so that's why, you know, and there are people out there, some of the market profile traders and stuff that do very, very well trading just the technicals, just those like order blocks and things on SPY. But for the most part, if you aren't watching the big names, you don't know what SPY's gonna do. I mean, that, if like an example that I always use is, like, obviously no puts at support, no calls at resistance. Well, that doesn't necessarily mean buy calls at that support. It just means don't buy puts. But if you start seeing, all of those big names breaking down, we actually took a short the other day. I don't remember where it was, but there's a double bottom on SPY. Everybody knows the only named pattern I trade, double tops and double bottoms. And people were like, are we long in this? And I said, nah, all of the other names are breaking down. We want the double bottom breakdown with a retest, or, failed double bottom technically with the retest to short it. So that's what we did. Got
Right.
lucky, happened to work out for us, But if I was only watching SPY, I was hammering the double bottom, no questions. It was the big
Right.
names that told me, not only do they tell you to take a trade, they also tell you when to not take a trade.
That was great.
Yeah,
That's awesome.
thanks. I don't know why I joined you today. I just got
I
the
don't know either, but it was
notification.
fun.
I got the notification you were doing a lecture, and I was like, "Whoo, Friday, 3-day weekend. It might just be me and Tostie. I should hop in there."
It was close. It was close.
Yeah.
It was, I mean, yeah, when it was just me and you and those two other people, I think it was maybe
Yeah.
like Dippin and Martial. I was like, oh, it's just us.
Yep, it's just us. Yeah.
Cool.
Well,
Well, I
any
think
other
that's gonna do it
questions?
for
I mean,
today.
I know we're
Yeah.
keeping Tostie too long. If you guys got any other questions, I can talk for 10, 15 more minutes, or we can call it here, whatever you guys want.
Yeah. If there's anything else, I can stick around for a sec.
Is Kath new trader, Kath? Is that you? I just want to ask.
They are currently, I think they're stuck DMing me. You got to go back to the everyone in meeting so River can
See,
see your message. Right now, I can see them all. They said yes.
nice. That's what I thought. Good job
Yeah.
being here. She's putting in effort for sure.
Mhm.
She, yeah,
Yep.
in
Have
VC
to.
all the
Yep.
time. Love to see it.
Have to. Yep.
I always try
It's
to
not a
I take note of the people that show up and try to learn. They're the people that in the end end up being worth
deserve the
helping out.
attention. Yeah, exactly.
Yeah. Okay. Well, no more questions. I'm out of here,
I don't
Tostie.
think so.
I hate you.
We'll talk soon. All right, everybody. Well, thanks
Hope
for your
not.
time. Yeah, maybe I'll try to do a lecture during market hours, maybe a time around your VC. I talked about that to Archon. Maybe we'll try it next week and see what happens.
Yep. So that's awesome. Okay.
Cool.
Bye, Tostie. Bye, everyone.
See
Thanks
you,
for being
everybody.
here.
Thanks for your time. Bye.